Hey, it's George from Triangulated back again this week with another edition of Listen to the Markets. So, this should be a pretty fast one today, but at a high level, what I'm seeing is basically a risk-off trade, a flight to safety. So let's look at a couple charts. First we've got the 20-plus year bond ETF, and had a pretty decent run of late. We also have the dividend stock index DVY, which is moving up pretty well. And then the U.S. dollar, it's obviously been moving around, but it's starting to move up a bit too, and is positive over the last week. At the same time, on the other end of the spectrum, we've got the NASDAQ that isn't looking too good. It's having a decent day today, but has been kind of selling off a bit. And we also have silver that after that gigantic parabolic run up has just can't get out of its own way, keeps dropping. So none of these moves is really huge in and of themselves, but I guess it's a picture where the money is going to more traditional havens, or what's left of havens. I guess gold at the moment isn't really acting as a haven. So beyond that, I looked under the hood of the stock market, the Druckenmiller idea that stock sectors will will act as the best economist that he knows. So what you see there is you see utility stocks outside of today have had a pretty decent run lately. Healthcare stocks have moved up decent in the last week. And consumer staples are also moving up pretty healthily. On the other end of that spectrum, you've got the innovative technology ETF, which can't kind of get out of its own way. And you have the software and services ETF, similarly not looking real good. And you also have the metals and minings, so that's probably just in sympathy with silver and gold after the big run. But similar picture there to the macro markets, where the sectors that are rising are the more defensive, typically haven sectors of healthcare, staples, and utilities. And on the other end, you've got sort of the high flyer tech stocks and the metals that have been running. The only other thing that's really standing out to me right now are the cloud stocks. And I know these guys are diversified companies, but I was reading their earnings releases, and I know cloud isn't their entire business, but the things they're saying about their business, about AI and about cloud, are just incredibly positive. I mean, it's some of the most positive stuff I've read coming from those transcripts from the earnings releases. And then you look at the stocks, and it's like, whoa, this is Amazon. It's really gotten clobbered. Microsoft similarly has gone from, call it 550, 560 down to 400 in the last few months. And Google is hanging in reasonably well on a relative basis, but still isn't looking too good lately. And, if you were to show me just the transcripts and the fundamentals and not show me the charts, this is not what I would think these stocks would be doing. Now, I know that Wall Street a lot of times is a relative to expectations game. So even if a company has huge growth, if it comes in shy of expectations, stocks can sell off. But still, just looking at what they're saying and the double-digit percentage growth rates that they're seeing in their cloud business and other businesses, and the backlogs and things they're saying, it's just sort of, it's hard to reconcile with what the charts are doing here, what the stocks are doing. So that really leads to one other thing, me to think that maybe expectations in general have just gotten a bit too crazy. AI has obviously been a hot topic lately. It's a topic that people are very concerned that AI is going to take all the jobs. And I actually wrote an article yesterday about that, and I'll share a link to it below. But basically the gist of it was AI to me is starting to look like it could be adhering to what George Soros called a boom bust process. So when I add everything up, what we're seeing is, from the macro level, from the stock sectors, there's a lot of flight to quality, flight to safety. And then the stocks that have very strong fundamentals, as per the executives and earnings, they're not doing very well. So it all kind of paints certainly a cautious picture. Anyway, that's it for this week. I'll link to that article on AI below. Have a read if you're interested. And I'll see you next week. Thanks.